Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5 in plain, practical language. I'm your host, AlgoBot, and today we're studying an expert advisor called Imbalance Inversion Retest. This is a pure price action system. It uses no traditional indicators at all. Instead, it reads raw candle structure to find fair value gaps, waits for one to fail, and then trades the continuation of that move. What makes it distinct is that it tracks many of these zones at once. By the end of this video, you'll understand exactly how it spots a setup, where it enters, and how it manages risk. Remember, this is educational information only. Let's dive in. Imbalance Inversion Retest is a momentum continuation strategy built entirely on candle geometry. There are no moving averages, no oscillators, and no lagging indicators. Every level it uses, the gap, the break, the stop, and the target, is measured directly from the highs and lows of recent candles. The single calculation it performs is a plain average candle range, which it uses only to scale its thresholds to current market volatility. The concept centers on what traders call a fair value gap or imbalance. This is a three-candle pattern where a fast middle candle leaves an untraded void in price. Many approaches treat that void as a level that should hold, like support or resistance. This expert advisor does the opposite. It waits for the void to fail. When price drives back through a fresh gap with a strong, intentful candle, the imbalance is invalidated and, in the language of this approach, it inverts. A broken bullish gap becomes a fresh supply area, and a broken bearish gap becomes a fresh demand area. From there, the strategy trades with the breaking move, not against it. It waits for price to retrace back into the inverted zone's 50% line, its equilibrium, and signals a continuation entry in the break direction. Two design choices stand out. It keeps a rolling list of many candidate zones rather than a single slot, and it only accepts a break that arrives on a strong-bodied displacement candle. This expert advisor was tuned with foreign exchange majors and gold in mind, on time frames around 15 minutes to 1 hour, though it is not locked to any single time frame. It suits traders who are curious about pure price action logic and order flow concepts, and who prefer mechanical, rule-based systems over discretionary judgment. As always, this is shared for educational purposes only. Trading carries real risk, and losses are a normal part of any strategy. Let's walk through the exact logic, step by step. The expert advisor acts only once per closed candle, so it never reacts to the noise of a still-forming bar. First, it measures volatility. It sums the high-to-low range of the last 20 candles and divides to get an average range. From this, it derives two values: a minimum gap size, set by default to 25% of the average range, and a stop buffer, also a fraction of that range. Second, it scans the last 3 closed candles for a fair value gap. For a bullish gap, the high of the oldest candle must sit below the low of the newest, with a real push in the middle, and the void between them must be at least the minimum gap size. A bearish gap is the mirror image. Each qualifying gap is stored in a rolling list. Many candidates are tracked at once, not just one. Third, it watches for an inversion. A gap only flips when a displacement candle closes through it in the breaking direction. Displacement means the candle's body fills at least 55% of its range, by default, so weak, drifting closes are filtered out. When a bullish gap is broken to the downside, it becomes an inverted supply zone. When a bearish gap is broken to the upside, it becomes an inverted demand zone. Fourth, it waits for the retest. The strategy calculates the 50% line of the inverted zone, its equilibrium. For an inverted supply zone, when price retraces up and tags that line, the EA signals a sell. For an inverted demand zone, when price retraces down to that line, it signals a buy. Whichever zone price reaches first is the one that trades, and only one position is held at a time. Finally, risk is defined before entry. On a sell, the stop is placed just above the zone, plus the buffer. On a buy, just below it. The take profit is a fixed multiple of that risk distance, by default, 2 times. A zone is also discarded if price closes back through it, which signals the gap has been reclaimed. Gaps in zones that are never used simply expire after a set number of bars, keeping the lists clean and the logic disciplined. Here's the heart of the code, as you'd see it in Meta Editor. At the top are the input parameters. These are the dials you can adjust before running the expert advisor. MinGapFactor sets how large a gap must be as a fraction of the average candle range. Raising it demands bigger, cleaner imbalances. RangeLookback controls how many candles feed that average. DisplacementBodyPct is the strength filter for the break candle. A higher value insists on a more decisive close. FEG expiry and retest expiry govern patience. How many bars a fresh gap may wait to invert, and how long an inverted zone waits for its retest. Stop buffer factor adds a cushion beyond the zone for the stop, and risk-reward sets the fixed reward-to-risk multiple on the target. Lots is the trade volume. Below the inputs is the core entry logic. The line computing EQ takes the top and bottom of the inverted zone and averages them. That's the 50% equilibrium line. The code then checks the zone's direction. When the zone is an inverted supply zone, it looks for the last candle's high to reach or exceed that equilibrium line. The moment price tags it, the EA reads the current bid price as the entry. The stop loss is set to the top of the zone plus the buffer. The risk is the distance from entry to stop, and the take profit is the entry minus the risk-reward multiple times that risk. Finally, it calls trade.sell to place the order. The buy side, not shown here, is the exact mirror. It uses the ask price, places the stop below the zone, and projects the target above. Clean, measured, and entirely rule-based. Let's watch the strategy in action on this illustration. Reading left to right, price first drops sharply over 3 candles, leaving a bearish fair value gap, that untraded void between the candles. Then a strong bullish candle pushes straight back up and closes above the gap. That break inverts the imbalance into a fresh demand zone, shaded green, and the dashed line marks its 50% equilibrium. Now the strategy waits. On the next candle, price retraces down, and its low tags that equilibrium line. This is the continuation signal, and the buy entry fires. Notice the trade goes with the upward break, not against it. From there, price climbs over the following candles until it reaches the take profit, set a fixed multiple of the risk distance above the entry. The long trade is complete. Watch what happens next. Price pushes higher and forms a bullish fair value gap near the top of the move. Then a strong bearish candle drives down and closes below it. That break inverts the bullish gap into a fresh supply zone, shaded red, with its own 50% equilibrium line. Again, the strategy waits for the retest. Price retraces up, and its high tags the supply zone's equilibrium. The sell entry fires, trading with the downward break. Price then falls to the take profit below, and the short trade closes. 2 trades, both following the same rule. Find an imbalance, wait for it to fail and invert, then enter on the retrace into its equilibrium in the direction of the break. The stop always sits just beyond the zone, so the risk is defined before the trade is ever placed. This is an illustration of the mechanics only. Real markets are far messier, and losses do occur. And that brings us to the end of our breakdown of the Imbalance Inversion Retest Expert Advisor. We covered how it finds fair value gaps in raw price, how a displacement candle inverts them into supply and demand zones, how it enters on the retest of the 50% equilibrium, and how it defines its stop and target before every trade. Remember, everything here is educational content only. It is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to study next, and subscribe so you don't miss future breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.